Howdy, and welcome back to the channel. You got Digital Asset Hutch here, bringing you all the know about the digital asset and U.S. economy space. And as y'all can tell, we got a weekly video for y'all. And we'll be going over a magnitude of things, going over that CBBI, total market cap, and some just news stories. If you guys enjoyed today's content, go ahead and drop a like below. Let's go ahead and jump into today's content, and we're going to go ahead and pull up that CBBI. As y'all can see here, we are coming in at 17 for February 18th. And let's go ahead and scroll down and look at that chart, because if you guys see, we did exactly what I kind of predicted in last week's video, where we kind of had two scenarios where we didn't know if it would be a 2015 where we peaked out at that 13 and fell back down, or if we already had that happen earlier and now we were more towards that halving where we would have a 2019 where we were just kind of consolidating, waiting for some of those moving averages to catch up to us before shooting off into that mini bull run, I guess we'll call it, during the consolidation phase where we kind of 3x'd. But as y'all can see here, we are ticking up after consolidating in that range, so that could be a bullish indicator. If you kind of have looked at some of these bottom indicators, it does look like most of them have started to officially bottom out, because it looks like the most widened part, it looks like these are starting to constrict. And as y'all can see in previous markets with that pi cycle indicator, once it starts constricting again, it does mean we are starting to head into that bull market. As well as if you just look up some of these other ones like the NUPL, we're getting higher and higher into that profitability. We're approaching that almost, what, about 18% of people that own Bitcoin are profitable right now. But like back at that FTX crash, it was 30% of Bitcoin holders were negative, because no one really thought we would break below that 20K range, or at least have a huge breakout. Hovering around 18, no one really thought we were going to break that 17.5 level, but ultimately that FTX crash, as you can see, kind of sent everyone, because we were still at 1% profitable, but that final FTX crash was kind of what did it. But those are just some of those indicators. We will go into some of those moving averages that we did point out with the golden cross and the death cross in other videos, because what we are kind of seeing is the death cross with the weekly moving averages are not so much a bad thing by any means, but it's actually looking like it is confirming that bottom, which we have seen in past cycles that we did show. And we're not going to highlight and spend too much time on that, because we did see that. We're just going through all of these kind of bottom indicators that we have pointed out. And as you see here, we had that daily cross, and we are hitting our head up against these levels that I did draw out quite some time. You might have seen them in other videos, but we ultimately came down and retested that area, and then just shot right up. So as long as we had that golden cross, it does look like that bottom was in, like we did call. Now the question is, where are we going from here? Not really quite sure. We did think we might hit that 30K range, because we do have a CME gap up here. It's kind of just, which gap are we hitting first? We come up and fill this 28, come back down here before liftoff. But let's go ahead and jump into CoinMarketCap and kind of see what's going on. Because as y'all can see here, just the last 7 days since the last weekly video, we've had 13%. When's the last time you've seen a double gainer weekly candle for Bitcoin? Let's go ahead and look into that for us. Kind of just discover that, but the last time we've had a double gainer Bitcoin candle would be back in January 9th, so about a month ago. And before that, you would have to go, that was 8%. You would have to go all the way back to March 21st of 2022 just to find a weekly candle. So, is it a bull trap? I mean, we've had back-to-back monthly, weekly closes. If I did have I unfortunately do not have The Heikin can't actually, we kind of do have. Hold on. And if you see here with the Heikin candles, we've had two back-to-back monthly green candles. And what's different with the Heikin candles is essentially it shows more of the trend because their candles, I don't really know the algorithm or mathematical equation behind it, but essentially its open and close is shifted and is different. So once you see here is if there is no wick on the bottom, then you can kind of assume that it is a pretty strong pattern. So as you see, it got higher, 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 and then as we cooled off, it got smaller. And then we went into that bear trend for the 3-4 months, shot back up, and as you've been seeing, it's red ever since. We had that 10% increase right back here, and as you can see, we had a nice little kind of swindle top and ultimately decided to crash down. So this is also kind of another bullish indicator. As y'all can see, we've had plenty of those that I just kind of showed y'all in the first 6 minutes of this video before I actually kind of take you into those news stories. But with all of those bullish indicators, no wonder we've kind of had those double-digit gains the last 7 days. And as you can see here, just to start the year, we're at almost 50%. Cardano's at 60%, Matic's at 100%. So all of these top 10 coins are just kind of blowing up. And I kind of want to show you some of these stories, like the first one we're going to go ahead and jump into today with OpenSea is going to 0 fees. And it kind of has me thinking here, and I wanted to see some of y'all's train of thoughts in the comments below. But if you guys remember, at the peak of the market, Crypto.com started slashing their rates. And it got a lot of people upset, but obviously if we're about to go into a bear market, a company's going to slash their rewards because they can't continue to afford that. The market's not going to allow their investments and assets to increase so they can start dishing out those 3, 4, 5%. And that's why you saw a lot of these companies go under, because essentially when the market crashes like this, let's go ahead and get you those regular candles. When the market crashes and all of a sudden they're looking at their reserve sheets and it's only got 70%, and some of these altcoins, 80%, it's gone down 80%. How are they going to afford these rates? So with them actually cutting it and not making money off of these transactions, as well as now moving the creator earnings up, it's getting me kind of thinking we are heading on that bullish indicator and bullish timeline again, or at least, getting into that accumulation phase where these companies are buying more. Maybe they're buying, hundreds of thousands, and that's why we're seeing these big moves. But it just has me thinking now that they've gone down to these 0 and 0.5%, gone down to 0% fees and up 0.5% for these rewards. It just has me thinking to that Crypto.com era when they did slash that. Let's see if I can go ahead and find. So yeah, you can see here it down from 5%. So it's just kind of important. I wanted to highlight that for you. And then as we kind of translate to that second story I have for y'all on the day is only 31% of staked ETH is actually profitable right now. And this is just from Binance research, so it's only one person who did that research, one company, so who really knows? It's just off of their information on chain metrics of how they read it. But yeah, they said 2 million ETH were staked around 4 to 600, and then 31% of it, as you can see from here, was staked. Oh, I guess we're probably more around 40% now with this more recent pump. 35. We'll call it 35% now with this more recent pump. But it kind of has you thinking of once they do release this ETH, do some of these people kind of just sell and be done with it? As well as do some of these profit people who are sitting at, 4, 5x gangs, do you think they also sell some of their, because they've been making 5%, as you can see here, making about roughly 4 to 5% annually off of it, so why wouldn't they? So you can see about 11.38 million ETH are in losses. So, I mean, just kind of off of that trader and investor mindset, they've probably been like kicking and seeing, oh, negative numbers this entire time, knowing that it's locked. But the moment it gets released to them, what do you think they're going to do? What do you think someone who kind of just was in it for the pump, who kind of bought at the top, thinking and seeing, oh, it's 10x, oh, it's going to 5x from here at least, and then they just got wrecked 80%. You really think some of them might hold, or do you think they're going to get out of the space forever because, oh, my money got locked and it crashed, this is a Ponzi scheme? Things of that nature. So I don't think that way, but, you know, some of these crypto newbies who haven't been in the space for a cycle could get that mindset again. So that's why I wanted to point this out to you, because it is a notable size, as they say here, with 2 million being in that range. So like, even though it was earlier stakers, they might have been knowledgeable about it. That's the exact reason why wouldn't you take some profits when it's on the table. That's from the initial bull market of last cycle. So they've already sat through the bear market watching it go down by what? We know it's probably not ADA ETH. They saw it already go down 80%. So just psychologically, they got in back here in December of 20. They saw it go up 1700% and they couldn't touch it because people said, oh yeah, in October you'll be able to unlock it. Maybe March of 2022. So they just kept getting like teased because everyone kept teasing this timeline of when they'd be able to get unlocked, but ultimately it never did. So that is something I wanted to point out for y'all. Now, some levels that we will be looking at going forward, I'll just go ahead. ETH is on its head right now and it's trying to determine if it does want to bust through it. So these levels, the orange, dark orange, and red, for these two charts are the levels that I am hoping we break through. You see Bitcoin's hitting their head on one right now. If we do break through that, I think that will be good, but we do need these other ones to follow through. And once we do that, I think we can have that confirmed bull market and consolidation range of we won't hit a new all-time low. Now, I personally think we're 90%, out of the bear market. 90% we're never hitting a new low. I understand the geo and the macroeconomics right now, but personally, it's all about the 4-year cycle. It's just, supply and demand. Each halving, that reward gets cut, so obviously when the reward gets cut in half, the price is going to have to do something to account for all those miners who were keeping their coins and hodling them. So obviously they're going to cash out. That's probably why we get these, accumulation rallies, because miners are just hoarding it up until that halving, and then right before the halving they see, okay, well, we need to sell some just to get some of our cash beforehand, get out, because it's almost every cycle you can see right before the halving we run up and then have a couple of red months. Run up, had a red. So just wanted to highlight those for y'all today. If you guys did enjoy this kind of talk, conversational with a couple of stories, just going through all of these bottom and top indicators, drop a like below, comment if you want me to go over some other indicators for y'all, and if you guys did enjoy this kind of more relaxed conversational, we might even jump on a live stream if that is something y'all would like. But that is all I have for y'all today. Go ahead and comment below and stay safe out there. Bye bye.